Welcome to our deep dive into Alphabet Inc.'s latest quarterly report, their Form 10Q for the period ending September 30, 2024.
We're going to be dissecting this document to
Yeah.
uncover some pretty fascinating insights into what's happening behind the scenes at Google's parent company.
Financial reports can be a little dry.
Yeah, they can be a bit dry, I'll admit,
But
but this one is different,
this one's
like a treasure map,
I love that.
leading us to a better understanding of one of the world's most influential companies.
Okay, so let's start with the big picture.
Sure.
The report paints a pretty rosy picture of Alphabet's overall financial health, wouldn't you say?
Absolutely.
Yeah.
Their revenue for the quarter hit a staggering $88.3 billion,
Wow.
a 15% jump compared to the same period last year.
So that's impressive.
What's really interesting is that this growth isn't just coming from their traditional stronghold search ads.
That's right.
While those are still bringing in the big bucks, the report highlights some other areas that are really taking off.
Yeah. Exactly. We're seeing a significant shift in how people are consuming content and how companies are advertising to them.
So, for example,
YouTube ads are experiencing a major surge, particularly in brand advertising.
what's driving that trend?
Well, it seems like companies are realizing that YouTube is where they can best connect with a younger, more engaged audience, an audience that's increasingly turning away from traditional television.
Makes sense.
This shift from TV to online video is a major trend that's reshaping the advertising landscape.
But speaking of advertising, there's one detail in the report that caught my eye and left me a bit puzzled.
Yeah.
Revenue from the Google network, which includes things like AdSense and AdMob, actually decreased slightly this quarter.
That is surprising, isn't it?
Yeah.
Especially considering the overall growth Alphabet is experiencing.
So for those of us who aren't familiar with the intricacies of online advertising, can you explain what the Google network is?
Right. Think of the Google network as a vast network of websites and apps that partner with Google to display ads.
It's how Google extends its advertising reach beyond its own properties like search and YouTube.
Okay, so this dip in Google network revenue could indicate that companies are becoming more selective about where they place their ads, perhaps prioritizing quality over quantity.
Yeah, I think that's a good point.
Yeah.
It could also be a sign of increased competition from other ad networks, or even shifts in user behavior.
It's like a little puzzle within a puzzle.
It is.
It'll be interesting to see how this plays out in future quarters.
Right.
Now let's shift gears and explore another area where Alphabet is seeing impressive growth: subscriptions.
Yeah, the Google Subscriptions, Platforms, and Devices category is a real success story, with revenue increasing by a substantial $4.8 billion over the past 9 months.
I find it fascinating that this growth encompasses such a diverse range of products and services, from streaming entertainment to productivity tools to cutting-edge hardware.
Absolutely. The report highlights the success of YouTube TV, which is attracting cable cutters with its live TV streaming options. YouTube Music and Premium, which offer ad-free music and video experiences, and even the Pixel phone,
Right.
with its timing of launch significantly impacting device sales this quarter.
So think about it. Have you recently cut the cord and signed up for YouTube TV?
Mm.
Maybe you've upgraded to YouTube Music Premium to avoid those pesky ads. Or perhaps you're sporting the latest Pixel phone. You might be part of this subscription surge without even realizing it.
That's a great point. It highlights how these seemingly separate pieces of the Google ecosystem are all interconnected and contributing to Alphabet's overall success.
It's like a well-oiled machine,
It is.
with each part playing a crucial role. Now, speaking of well-oiled machines, let's talk about the cloud computing revolution that's happening.
Yeah.
The report makes it clear that Google Cloud is becoming a major force to be reckoned with.
Indeed, Google Cloud pulled in an impressive $11.3 billion this quarter, a 35% increase year over year. What's particularly noteworthy is that Google Cloud's growth rate is outpacing that of their advertising business.
Wow.
This suggests that they're not simply riding the wave of cloud adoption, but actively gaining market share.
So how are they achieving such impressive results in such a competitive market?
Well, Google Cloud offers a wide range of services, from basic infrastructure like servers and storage to advanced data analytics and artificial intelligence tools. It's a one-stop shop for businesses of all sizes looking to move their operations to the cloud.
Okay.
It consists of Google Cloud Platform, where all that infrastructure, data analytics, and AI magic happen. Google Workspace, which you might know better as their suite of online productivity tools like Gmail and Docs, and then a whole bunch of other enterprise services they provide.
And it's not just about offering a wide range of services. It's about differentiating themselves from the competition.
It's exactly. While the report doesn't explicitly name their competitors, it's clear that they're going head-to-head with some of the biggest names in tech.
Yeah.
And one of Google's key differentiators is their expertise in artificial intelligence, specifically their new AI platform, Gemini.
That's right. They're positioning Gemini as the next generation of AI capable of tackling even more complex and challenging tasks than previous systems.
It's a bold claim,
It is.
but given Google's track record in AI,
Yeah.
it's certainly worth paying attention to.
Now, amidst all this talk of cloud computing and artificial intelligence, there's another category that always piques my curiosity. Other bets.
Ah, yes, other bets.
It's where Alphabet houses its more experimental ventures.
Right.
The ones that don't quite fit into the neat categories of Google's core businesses.
It's like their playground for innovation,
Yeah.
where they can explore uncharted territories and potentially create entirely new industries.
Exactly. And while the report doesn't delve into too much detail about these other bets,
Right.
it does provide some intriguing glimpses into what they're up to.
We see that revenue from other bets is mainly coming from healthcare and internet services.
Yeah.
But the real star of this segment, at least in terms of media attention, is Waymo, their self-driving car company.
And speaking of Waymo,
Yes.
they just received a massive $5.6 billion infusion of funding, mostly from Alphabet.
Right.
That's a pretty strong signal that they're not just dipping their toes into this self-driving car pool.
No.
They're diving head first.
It's a huge bet,
It is.
but one that could pay off handsomely if autonomous vehicles become as ubiquitous as many predict.
It's definitely a long game,
It is.
but one that Alphabet seems willing to play.
They do seem committed.
Okay, so we've covered a lot of ground already.
We have.
We've seen how Alphabet is firing on all cylinders, from their core advertising business to their rapidly growing cloud computing and subscription segments to their more experimental ventures and other bets.
But it's not all sunshine and rainbows for Alphabet.
Oh.
Like many tech giants, they're facing some significant legal challenges,
Oh,
particularly in the realm of antitrust.
that's right. No deep dive into Alphabet would be complete without acknowledging the looming shadow of these legal battles.
And the report doesn't shy away from addressing these issues. It dedicates a significant portion to outlining the ongoing antitrust saga,
Right.
particularly the fines imposed by the European Commission.
So for those who might not be following this closely,
Yeah.
can you give us a quick rundown of what these antitrust cases are all about?
Sure. The European Commission, which is the executive branch of the European Union, has been investigating Google for potential anti-competitive practices for years now.
Okay.
They've accused Google of using its dominant market position in search to stifle competition and harm consumers.
And these accusations have resulted in some pretty hefty fines, haven't they?
Billions, actually one of the most significant fines, a whopping $2.4 billion, relates to Google shopping results. The European Commission found that Google was unfairly favoring its own shopping comparison service over those of its rivals.
Okay.
And just this past September, the European Court of Justice upheld that fine.
Ouch, that's got to sting even for a company with Alphabet's deep pockets.
It definitely sends a strong message that regulators are taking these antitrust concerns seriously.
Yeah.
And it's not just about the fines themselves. It's about the potential for these rulings to force Google to change how they operate certain parts of their business.
That's right. These rulings could have far-reaching implications for how Google displays search results, distributes its Android operating system, and conducts business in Europe in general.
And it's not just Europe.
Yeah.
There are other antitrust lawsuits in the U.S., some with potentially even more impact on their core business model that are still up in the air.
So these are cases to watch closely as they could have a major impact on Alphabet's future.
Absolutely.
It's definitely a reminder that even the most successful companies aren't immune to scrutiny and legal challenges.
Absolutely. And it highlights the complex and often contentious relationship between tech giants, governments, and consumers in the digital age.
Okay, so we've covered a lot of ground in this first part of our deep dive into Alphabet's 10Q.
Yeah.
We've seen their impressive financial performance, the rise of their cloud computing and subscription businesses, and the looming legal battles that could shape their future.
In the next part, we'll delve deeper into the financial details, examining their profitability, cash flow, and overall financial health.
It's going to get even more interesting, so stay tuned for part 2.
We'll be right back.
Welcome back to our deep dive into Alphabet's 10Q.
In part one, we got a good sense of their overall performance and some of the big picture trends shaping their business.
Yeah, now it's time to roll up our sleeves and dig into the financial nitty-gritty.
That's where we can really start to see how these trends translate into cold, hard cash.
Exactly. Let's start by looking at profitability.
Okay.
One of the things that jumped out at me from the report is just how profitable Alphabet is across its various segments.
Their overall operating margin is a healthy 32%,
Wow.
which is up a significant 4% from the same quarter last year.
A 4% jump in operating margin is nothing to sneeze at, especially for a company of this size. What's driving that increased profitability?
It's a combination of factors. On the revenue side, we're seeing robust growth in those higher margin businesses we talked about earlier, particularly Google Cloud and their various subscription services.
Right, because those tend to have more predictable recurring revenue compared to the sometimes fickle world of advertising.
Exactly. And on the expense side, while Alphabet is pouring money into research and development, particularly into AI, they're also clearly being mindful of their spending in other areas.
Uh-huh.
The report mentions charges related to office space optimization,
Hmm.
which sounds like a fancy way of saying they're trimming some overhead costs.
Makes sense, especially as many companies are reevaluating their real estate needs in a post-pandemic world.
Right.
Now let's talk about cash flow.
Okay.
For me, this is one of the most important indicators of a company's financial health.
Couldn't agree more. And Alphabet's cash flow is nothing short of spectacular. Their operating cash flow for the first 9 months of 2024 is a whopping $86.2 billion. Wow. That's a nearly 4% increase compared to the same period last year.
So,
Even with that $3 billion cash payment they made this quarter for the 2017 European Commission shopping fine.
wow, so even with those legal headaches, they're still raking in the cash. It's like a money-making machine.
That strong cash flow gives Alphabet tremendous flexibility.
Yeah.
They can invest in promising new technologies, make strategic acquisitions, or even return value to stockholders through those stock buybacks and dividends we discussed earlier.
Speaking of which, can you remind us how those stock buybacks and dividends work and how they impact the company's financial picture?
Sure, when a company buys back its own stock, it reduces the number of outstanding shares, which can increase earnings per share and make the stock more attractive to investors. Dividends, on the other hand, are direct cash payments made to shareholders.
Mm-hmm.
They're essentially a way for companies to share their profits with their investors.
So it's all about finding the right balance between investing for future growth and rewarding current investors.
Precisely. And based on what we're seeing in the 10Q Alphabet, appears to be striking that balance quite effectively.
Now, every time I read one of these financial reports, there's always a section that makes me a little nervous.
Which one?
Commitments and contingencies. It's basically a laundry list of potential risks and legal liabilities that could impact the company's future.
It can be a bit daunting, I'll admit, but it's an important reminder that even the most successful companies face uncertainties and challenges.
Absolutely. So let's break it down. What are some of the key takeaways from that section for Alphabet?
Boy.
What are the major legal battles that could have a significant impact on their bottom line?
Well, as we've already discussed, the ongoing antitrust saga is a big one. Those fines from the European Commission are substantial, and the outcome of other antitrust lawsuits, particularly those in the U.S., could force Google to make some fundamental changes to how they operate. And there are a number of privacy-related investigations and lawsuits, particularly in the U.S. and the EU,
Okay.
which could also lead to significant fines or changes to their data collection practices.
It seems like every move Alphabet makes is being scrutinized from every angle. It must be a lot to juggle.
It definitely highlights the challenges of operating a global tech giant in an increasingly complex regulatory environment.
For listeners who are considering investing in Alphabet or any other tech company for that matter,
Right.
paying attention to these legal battles and regulatory risks is absolutely crucial.
I couldn't agree more. These aren't just abstract legal concepts.
Yeah.
They have the potential to impact a company's financial performance and even its long-term viability.
Okay, let's move on to something a bit more upbeat.
Sure.
Alphabet's investments. We've already talked about that massive $5.6 billion investment in Waymo.
Right.
But the 10Q also provides some insights into their broader investment portfolio, doesn't it?
That's right. The section on marketable and non-marketable securities gives us a peek into how Alphabet is putting its money to work beyond its own operations.
Right.
Their portfolio includes a mix of government bonds, corporate debt, mortgage-backed securities, and even equity stakes in other companies, both public and private.
So they're not just sitting on a giant pile of cash. They're actively managing their investments to generate returns.
Exactly. They're essentially acting like a giant investment fund, leveraging their financial expertise and resources to navigate the complexities of the financial markets.
Mm-hmm.
And it's worth noting that their investment portfolio is quite diversified, which helps to mitigate risk.
Now, I'm particularly intrigued by those non-marketable equity securities. These are investments in privately held companies, which can be a bit more mysterious than investments in publicly traded stocks.
Right.
What can we glean from the report about these holdings?
Well, as of September 30, 2024, those non-marketable equity securities had a carrying value of $33.7 billion.
That's a lot.
That's a significant chunk of change. While the report doesn't disclose the specific companies they've invested in, it does mention that these investments are primarily in early-stage companies,
Okay.
including some in renewable energy.
So it sounds like Alphabet is not just chasing financial returns. They're also making strategic investments in areas that align with their long-term vision.
That's a great observation. These investments in renewable energy, for example, could be seen as a way for Alphabet to hedge against the risks of climate change while also potentially positioning themselves to benefit from the growth of the green economy.
It's a smart move, and given Alphabet's track record of innovation, I wouldn't be surprised to see some of these early-stage investments blossom into major success stories down the road.
It's certainly a possibility, after all. Alphabet has a knack for spotting promising startups and nurturing their growth.
Okay, so we've delved into Alphabet's profitability, their impressive cash flow, the legal challenges they face, and their diverse investment portfolio.
We've really gotten under the hood of this financial powerhouse.
And in the final part of our deep dive, we'll step back and connect all the dots. We'll explore what this 10Q tells us about Alphabet's long-term strategy and what key questions investors should be asking.
Join us for Part 3, where we'll synthesize all this information and consider the implications for Alphabet's future.
Welcome back to the final part of our deep dive into Alphabet's 10Q for the quarter ending September 30, 2024.
We've covered a lot of ground,
You have.
from their financial performance and investments to the legal and regulatory hurdles they face.
We've seen the impressive numbers, but now it's time to step back and consider what it all means.
Right.
What does this 10Q tell us about Alphabet's long-term strategy?
Where are they headed?
That's the million-dollar question, isn't it? And I think this report gives us some pretty strong clues. One thing that's crystal clear is that Alphabet isn't content to simply rest on its laurels as the king of search and advertising.
Absolutely. They're playing the long game, actively diversifying their revenue streams, and placing some big bets on the future.
And two areas where those bets are particularly evident are cloud computing and subscription services.
You're right. Google Cloud is growing at an incredible pace.
Yeah.
And their investments in products like YouTube TV, YouTube Music Premium, and Google One show a clear commitment to building a solid base of recurring revenue.
It's like they're creating a safety net,
Yeah.
recognizing that the tech landscape can change rapidly and that relying solely on advertising revenue could be risky in the long run.
And let's not forget about those other bets.
Right.
Those ventures that may seem a bit out there right now,
Yeah.
like Waymo and their self-driving car ambitions. They may not be bringing in huge sums of money today, but they have the potential to disrupt entire industries in the future.
It's like they're planting seeds that could grow into giant redwood trees someday.
A very apt analogy. And speaking of seeds that could grow into something massive, we can't ignore the elephant, or should I say the AI in the room.
Right. We've touched on Alphabet's AI investments throughout this deep dive.
We have.
But it's clear from the report that AI is at the very core of their long-term vision.
It's woven into everything they do, from enhancing their existing products and services to creating entirely new ones.
Yeah.
Their recent consolidation of Google Research and Google DeepMind, along with that substantial acquisition of Character, AI demonstrates their unwavering commitment to pushing the boundaries of what's possible with AI.
And they're clearly not afraid to spend big to get there. That $2.7 billion they shelled out for Character. AI, a company specializing in large language models, is a testament to their belief in the transformative power of conversational AI.
Think about the implications.
Yeah.
We could be interacting with our devices in entirely new ways, having natural human-like conversations with machines that understand our needs and preferences.
It's both exciting and a little bit unnerving, wouldn't you say?
It is a little bit of both.
But let's not get ahead of ourselves.
Right.
While AI holds immense promise, Alphabet faces some significant challenges in the here and now.
Right. Those antitrust lawsuits, especially the ones in the U.S., are a major cloud hanging over their heads.
Yeah.
These cases could force them to make major changes to their business practices, potentially even breaking up the company.
And we can't forget about those privacy concerns,
Right.
regulators and consumers are increasingly scrutinizing how Alphabet collects and uses our data.
Mhm.
And any missteps in this area could have serious consequences for their reputation and their bottom line.
It's a delicate balancing act.
It is.
They need to innovate and push boundaries while also being mindful of the ethical and legal implications of their actions.
So for investors, this presents a classic dilemma: high risk, high reward.
Right.
Alphabet has the potential for incredible growth,
Yeah.
but there are also significant challenges and uncertainties on the horizon.
It all comes down to how much risk you're willing to stomach. If you believe in Alphabet's long-term vision and their ability to navigate these choppy waters, the potential rewards could be substantial.
This deep dive has given us a lot to chew on.
It has.
Alphabet is a complex and fascinating company at a crucial juncture in its history.
They're a financial juggernaut with a knack for innovation, but they're also facing unprecedented scrutiny and legal battles that could reshape their future.
So here's a final thought for our listeners to ponder. How might these legal battles and Alphabet's all-in bet on AI reshape the company and its role in our lives in the years to come?
It's a question worth pondering, as the answers could have profound implications for all of us.
Thank you for joining us for this deep dive into Alphabet's 10Q. We hope you found it insightful. Until next time, keep learning, keep exploring, and keep diving deep.